Okay. All right. Sorry, I was facing a technical difficulties. So I think now we are fine. Okay. Uh, all right, then let me just rewind again quickly. So, um, strategy is basically it's very simple to my first orb or the latest 2026 orb model, but this is like 90% reversals, probably 10% continuation. So we wait for the 945 candle to form. You mark the high and the low of the candle, and then obviously for both NQ and ES, all right. And then you wait for the price to uh, to be above the orb so that we can take a reversal shorts, and same if we are below the orb we can take a long for reversal as well. Okay. So the strategy is basically orb London sweep. So what is London? London basically the let's just assume this is London. Yeah, this is London high and this is London low. Okay. So for us, for instance, in this instance, for us to go shorts, yeah, we need the price at 10 a.m. Yeah, 10 a.m. price to sweep the or high of the orb and the London high. London high. That's where we will be interested to take shorts. And now you'll tell me, what if the price, what if London high was swept pre-market? Then you uh, you will only look for shorts. It's fine. It's still the same. It doesn't really matter. But why am I focusing on London highs? Let's say, for instance, it's 10:01 now, and London high has not been yet taken. So that's where we will be looking for longs. But 90% of the times, London will be swept, either pre-market or during the New York Open. All right. So in this case, price did not sweep London high. Then we're gonna look for any inversion with correlation with ES. ES has to be above the range as well. We do not take trades inside the range. So the price on ES has to be here, same as NQ. You see an inversion, you take longs, targeting 1-to-1. Your stop is at the recent swing high or swing low. All right. Same goes with London low and orb low. In this instance, the price already swept the London low. We're gonna be looking for longs. Obviously, ES has to be in correlation with NQ. They both need to be below the orb. We do not take trades inside the orb. All right. So I'll be backtesting 2025 entirely. All right. And we will see the results together. So let's start now. This is 2025. I created already the new session. And also regarding the news, we do not trade if we see FOMC. FOMC, we do not trade. If the president is speaking, we don't trade. What else? And if Fed Powell is speaking. So Fed is speaking, Trump and FOMC meeting minutes, or the federal interest rate. So we avoid these days, and obviously bank holidays we do not trade. And the trade window is going to be from 10:01. Oh, my drawing is terrible. 10:01 a.m. until, so at 11. So basically 10:59. We do not see an entry. We close the chart. We go for the next day. This is our only window to trade. That's where we look for an entry, right? Now regarding the break even, I will be explaining the break even while I'm backtesting, because there is a break even. It's not on 0.8 hours, 0.6. It depends. There might be no break even in a trade. I will explain shortly. Okay, so now let's start with here. That is on our left hand side is NQ, right hand side is ES. We mark the high and the low for both. All right. Go to the 1 minute. We move the price until it's 10 a.m. So now it's 10 a.m. What do we see? We have London high already been swept. London low already been swept. So that means we're gonna long here and short here, right? Go to the 1 minute. We look for any inversion. We have this inversion here. Price is not inverted. No inversion yet. Yeah, we do have this small tiny inversion, which is valid. We're gonna take it. So the entry is going to be a stop order on the high of the candle that was closed, and your stop is at the recent low. Your target 1-to-1, and now when to move to break even. All right, so you open the 5-minute time frame, and then you see the first fair value gap the price tags into. That's where you move to break even, where our first 5-minute fair value gap is going to be here. So the price, so technically this trade has no break even. It's either TP or stop loss. All right, let's assume that was a actually, let's wait for the trade to play out. Stop order. I'm risking 0.5% for a 50k account. Obviously the trade is correlated with ES. That was a winning trade. So let's assume the 5-minute fair value gap was, for some reason it was here, right? So at this point you move to break even, and then you let the trade play. Okay, so now let's say for instance the price inverted the fair value gap. At the same moment, because it will happen, I can assure you, at the same moment the price inverts a fair value gap, which is here, and for some reason this was a 5-minute fair value gap here, then you do not enter the trade, because you're entering once the okay, at the 1 minute the price inverted the fair value gap, but at the same time on the higher time frame 5-minute price taps into a bearish fair value gap, and you're looking for long. It's a risky trade. It's not a high probability no more. So what do we do in this instance? We will wait for the price to resweep the recent low and then give us an inversion fair value gap to go for a long. Okay, that's pretty much it. All right, if there's any question, please let me know, but I think it's pretty simple. So this is Wednesday. What do we have Wednesday? News. Oh, we have FOMC minutes. We do not trade. We go Thursday. Oh, Thursday is a bank holiday. Not a bank holiday, but there is some holiday. I can't recall because the market is not open. Right now we go to Friday. What do you have on? Okay, we don't have anything. We mark the high and the low. All right, so London low has been swept and London high also been swept. So we're gonna long here and short there. Okay, we wait for the 10 a.m. candle. We do have this gap though, if the price inverts. Alright, which the price did. Look at ES. ES is below the range, so that means there is a correlation. That is a valid setup. Our rules is met. The recent swing low is here. We target 1-to-1. Now we open the 5-minute fair value gap. When do we move to break even? We move to break even here. Yeah? Right. And TP hit. Okay? It's Fridays, go Monday. So I'm doing an entire year of testing so that, because I've been receiving a lot of comments. Give us a good strategy, give us a great setup, etc., etc. I mean, the thing is, all of the strategies that I upload on YouTube, they all work, but it's up to you to connect the dots and make something of your own. Because if you keep on depending on others in this game, it's not gonna work. Because what will happen is you will take a strategy and you will backtest 2-3 weeks, and then you'll end up with 20 trades, and only 7 of them were winners. The rest are loss. You immediately judge the strategy. You cannot do that. You have to at least backtest 500 trades, 2-3 years of data. That's where you understand actually the strategy, if it's good enough or not. Don't backtest a strategy and judge it on a small sample. You have to gather a big amount of data, which we are doing now here. All right. Why am I backtesting this strategy? Because this strategy, from the losses I had last year in May and June, it helped me refine the orb model. Actually, that model, I wasn't about to put it on YouTube, but I'm like, you know what? I think it's time. Like, I was holding this model back, but I'm like, no, I think it's time. This model made you probably like 6 to 7 payouts last year, at the end of the year, like from August until December. And I have one of my mentees would vouch for me. They traded with me, and it's the same strategy, the same exact strategy. Moving on. That's the 15-minute candle, 9:30. All right. See here, London high is not been swept. Yeah. So that means in this scenario, we are going to be looking for longs. Yeah. Just looking for a gap. There's no gap here. There's a gap here. Alright, so the price inverted this gap. Now we look at ES. Is ES above the range? Yes, it is. So that's a valid setup. We place a stop order here. Stop is at the recent swing. Target 1-to-1. And we look at 5-minute. There's no 5-minute gap, so this trade has no break even. It's either TP or stop loss. Yeah. Alright, the price did not tap us in, so that stop order saved us. We cancel that stop order. Now we look for another fair value gap. Alright, perfect. So the price inverted this fair value gap, and it's correlated with ES. Open the 5-minute. There's no 5-minute fair value gap, so that's gonna be a no break even trade. Right, stop order. Beautiful. You can target this. I mean, you can, I would do that, But if we're looking mechanically one-to-one, just to gather data, you could do that. But logically, that was the target, because there is no gaps in between. Okay. That's the high and the low. All right. It's 10 a.m. We have this inversion. All right. Oh, so we won't take this trade. Why is that? Because ES is inside the range. So this is an invalidation. It might work out, might not. I think, yeah, it did work out, but we're following rules here. It was not correlated, so therefore we do not enter this trade. We wait for the price to go all the way down to sweep this low and then look for another entry, which it did just now. Also inverted another fair value gap, but ES is still inside the range, so yeah, there's no trades this day. ES was like during the entire session inside the range, so no trade this day. High and low. Oh my god, the hell is this candle? All right, price obviously swept London high, so we're going to be looking for shorts. That is a gap right there, correlated with ES. The price did not sweep yet the 5-minute fair value gap, 1-to-1. All right, that was a stop loss. So I was moving to 5-minute. I want to make sure we are not tapping into any 5-minute fair value gap, but that was a stop right there. Okay. Moving on. All right, London low has been swept. We look for, oh, okay, that is the entry right there. No 5-minute fair value gap, so we go for 1-to-1. That was a close one, but it was TP anyways. So at this trade, there's no break even because there is no 5-minute fair value gap, and which was valid. The price, when we inverted, was correlated with ES. Everything met the rules. Next day. So in this case, we're gonna be looking for shorts because London low has not been yet swept. Yeah. So here we're gonna be looking for shorts, not reversals below the orb, but shorts above the orb. All right. Let's see. Yeah, there's no trade this day. The price is super choppy and is not even correlated. Or 20 January. High and low. Wait, what is this? No, this is fine. London low been swept, so we're gonna be looking for longs in this case. if we invert this gap, which we did right here, 5 minute, not yet, stop order. All right, clean trade. Okay, go next day. High and low. What the hell is this? High and low. The price swept London low and London high, so we're only looking for reversals here. Oh, we have a trade right here that was correlated with ES right there. No 5 minute gap yet formed, so no break even as for now. Okay, that was clean. Like 4 minute trade, clean trade. Next, we're almost done with January though. Okay, now we're only looking for shorts since London has been swept. All right, so that was the inverted candle with a ugly wick right there. I don't usually take such trades, but we're following rules here. I would like a resweep and then, but anyways, it invalidates our trade, so the price did not tap us in, so it went. So when do you remove the stop order? Is when once the price did not tap you in and then hits your stop loss. Yeah, that's where you don't take the trade. So we have a gap right here. We just inverted again. I don't like this. Let me see the 5 minute. There is no 5 minute gap. Okay. Price tap us in and we hit stop loss. Go next day. See, like such trades, you could tell that there is not gonna work out when you see a big rejection on the inversion closure. So, you know, such trade, well, that's where the discretion kicks in. Yeah, that's where the discretion kicks in, and then you can tell whether it's a good trade or a bad trade. But since we're trading mechanically, all right, then it's for you to like once you backtest at least 500 trades, you'll be able to understand which entry is a A plus setup or if it's like a B or C, right? Right here it was a big candle, big rejection candle on the inversion. I wouldn't have taken that. Just go back and show you. First one here, second one here. You want something like this, like when you invert a gap, you want to see a displacement candle, such as this, which it works out. You don't want to see wicks more than body, right? That's well. In our case now, we're gonna take anything, and just show you with a mechanical model without you even thinking about anything, just taking any setup, right? You can still make money and be profitable as long as you're trading one trade a day. But when your discretion kicks in, you only want to see actually for like to filter a good setup from a bad one is you need the displacement candle, a candle that has more body than wicks and has to be a big candle such as this. This would have been good. That would be TP 100%. That was a 1 hour right there. Moving on. All right, London high is here. It's 2 a.m. Oh wait, we don't trade this day. Trump is speaking. We skip. high and low, high and low. London lows not been swept. High, it was swept pre-market, so we're looking for shorts above the orb, but the price is not correlated. This is London low. So if the price inverts this candle, I'm gonna go shorts. All right, that's my short. ES is below the range, NQ is below the range. Stop order here. Stop at the recent swing high, 1-to-1. Oops. That is just crazy. Look at this. Look how close the price. Well, to be fair, the price went to our target, which was London low. But look what happened. It's like literally that's how much? That's like $15 difference. Or that's up to you. Like up to you to decide. You want to close early or not? That's up to you. I would have just target London low, but because we're following rules, that's a stop, right? But in live session, you'll be crazy if you don't close the trade here. Actually, let me check the 5 minute. Do we have a 5 minute? No, we don't have anything. Nothing. All right. We look for shorts. That was a 5 minute fair value gap. It was swept already. So we wait for the price to do a resweep for us to go shorts, which it didn't. And the trading windows for us is already over. So we don't take anything here. We go Tuesday. Okay. So we go for longs. The price inverted here, but look at ES. ES is inside the range, which it did go up. So now we look for shorts. Oh, actually we missed a short right there. I did not see this inversion. I mean, the trade has to close here. That is 1R. So let's assume, because look what happened here. This was the 5 minute fair value gap, yeah? The price taps into it. You move to break even here on this candle. This one. The price hits the TP and then retraced all the way back up there. So kind of saved us, but I think it will just be a reversal. Anyways, you got the idea of the 5 minute. You mark the 5 minute and you move to break even. Whether it's 0.2R, 3R, 4R, doesn't really matter. You always protect yourself, because after every 5 minute gap, the price tend to have a deep retracement. So Wednesday we do not trade. It's Feds. Go next day, Thursday. I don't know why this is disappearing. Oop. So we're looking for shorts. Okay, never mind. We're looking for longs now. Nothing here. Alright, that's a valid entry. No 5 minutes. Yep, no 5 minute trade. Actually, we do have a 5 minute here. Let me just mark it down. I didn't see this gap, so that's a gap. Oh yes, so in this case, we do not take this trade. Same what happened like two days ago when we skipped a trade. The price already swept 5 minute fair value gap just now. So what do? We need to wait for another resweep for us to go shorts. And there is we are out of the trade window. You see how the 5 minute gap saved us? Like here it saved us, but 2 days ago it just invalidates a trade which was supposed to be a winner. But you know, you like always protect yourself from 5 minutes gap. They're really dangerous, especially if you're going reversals. So in this case, the price already swept this gap. You do not take a 1 minute inversion. You need to wait for another resweep to go for longs. Okay, so this day we just saved us. Go next day. This is the last day trading, 31 of January. What the hell is this? Oops, sorry. High and low. High and low. Okay. London high has been swept. So yeah, that's our entry. There is no 5 minute gap. So there is no break even in this trade. Okay. Stop order here. 1 to 1. The price did not tap us in. Close the order. Now we need to wait for a resweep to go for shorts. Alright, that's the entry. Price already swept the 5 minute, and then it just reswept the highs. Stop order. 1 to 1. Oh, we did sweep a 5 minute. I am sorry. So we need to wait for another resweep. Always mark whenever, like here I kind of slipped. I did not open the 5 minute. Let me just redo it again to make sure the trade is valid. So that was the gap. Oh yeah, you see that? So that was the fair value gap. The moment the price inverted the fair value gap on the 1 minute, there was a 5 minute gap right there. So it invalidates our trade. Even though it almost hits TP, but we need to wait for another resweep. Now it's past our trading window. So January is just done right now. Let me just go see the results. We go to the analytics section. So the 5 minute gap, it saved us from 2 trades, 3 trades. The first trade should have been a winner, but obviously you need to follow the 5 minute gap. The rest 2 trades, it saved us from a stop loss. Right, so how much did we make? Well, I'm taking into account a 50%, a 50k account, yeah, funded account. Let's assume, and if you're always take into consideration that you're copy trading, you do not trade prop firms if you're not copy trading. You have to copy trade. because the small these small wins that you have, it actually means more to you. So in this case, this month we've made 2%, which is very good. We have 3 losses, 7 winners. Not bad for January, not bad. We made $1,000, and if you copy trade whatever accounts you want to have, then you just you do the math. So that will be it. I will see you guys next Saturday. I'll be backtesting February. So every Saturday I'll be backtesting 1 month. Next Saturday, February, March, April, till I end this year. Obviously, December we won't be trading. I don't encourage. Back then, I always say trade only the first week, maybe second week of December, but try to avoid December entirely. So the first week of January, do not trade it, and December completely do not trade it. Just ignore December. Just take a 1 month off. It's very choppy, very less liquidity in the market. Less volatile. So it's way better to just ignore December and take a 1 month off the charts. Right?